There were a lot of interesting topics covered at the NAIC meeting. One of the more interesting ones was the resignation of Mike Considine. It was also announced that COO Andy Beal would be stepping in as acting CEO until they can find a replacement. We caught up with several leaders of the NAIC and asked them about these and other topics. I was also able to speak with Virginia Insurance Commissioner Scott White, who was recently elected Secretary-Treasurer of the NAIC. Here are those highlights.
Right. So in terms of Mike stepping down, I would just first say we wish him well and we thank him for his service. He's been a tremendous asset to the organization. The leadership he's shown over the last 6 years has left the NAIC stronger. So we're going to miss him. But obviously we have to take the next steps in terms of transitioning, and that involves appointing an interim CEO, and also just making sure the organization and the members are kept fully updated about the next development. So we're excited about our next steps, but we do wish Mike well in his next endeavor. Right, so we've been focused on and watching very carefully the bank failure, Silicon Valley Bank and Signature Bank, and seeing what kind of contagion risks there might be. The obvious question that flows from that is, how does this impact the industry, number one, and are there lessons that we can draw? Because we're dealing with some of the same macroeconomic conditions, right? You've had a prolonged low interest rate environment that have caused insurance companies to invest in certain ways, and also now we're in a rising high interest rate environment, and that's what's led in part to the downfall of Signature Bank. So you look at liquidity, credit risk, things of that nature. In terms of deposits, you might see short-dated annuities where people could surrender their policies, and the companies would have to make sure they had funds in place, and if they're tied up in long-term investments like we saw with Signature Bank, we might have liquidity issues. So we've looked at those. We think, generally speaking, we don't face the same issues, but it's something we want to monitor. And again, it's lessons learned. You have to be an active regulator. You need to go in and examine these banks. You need to make sure they're doing proper stress testing, that they have a chief risk officer in place. And so, we understand the challenges with the banking industry, and we face some of those, but we just need to be vigorous in terms of making sure that they have, they're able to pay these claims and keep their promises down the road. Right, so we're kind of still at the beginning of the year, so we're spending a lot of time on developing our strategic priorities and deciding what we're going to focus on. So I could talk about any number of things, but one thing that always interests me is our focus on climate risk and resiliency. So we're doing a lot of great work. This is something we've been focused on for the past several years. Just to mention a few of one of our priorities in that area, we've developed through our CIPR, our Center for Excellence in Modeling, and so that organization is helping the states in 3 different areas: training and research, and also just looking at models that carriers are using. So that's something. Again, it's in its early stages, but we think down the road it's going to be very helpful. In terms of scenario analysis too. If you look at climate, you have to look on both sides of the balance sheet, so to speak. So you have to look at, particularly on the P&C side, the underwriting and making sure they're factoring in the risks coming down the road in terms of modeling. But even on the other side of the balance sheet with the assets, something we're talking about more is the transition risk, right, in terms of these assets. So I expect that to get more attention this year. We always talk about the flood program, right? And we want to make sure we have a sound, stable flood program, but we also want to encourage our private market. And then within our climate risk and resiliency task force, we look at things like pre-disaster mitigation efforts, right? We want to make sure we can lower the losses and have a positive impact in that area instead of just focusing on payment of losses after a catastrophe occurs. So lots of good stuff going on in climate. The other thing I'd mention, we're very focused on long-term care insurance in Virginia. We've kind of led that effort at the NAIC through the task force. Last year, we adopted a multi-state actuarial process where we have really a small group of actuaries will review filings on behalf of the participating states. Hopefully it's a lot of states. And the goal there is to address some of the problems that we've seen in the last 10 or 15 years that the states can address in terms of making sure the rate approvals that come in are done consistently, that they're actuarially appropriate, and that they're done timely. So we hope to see more filings in the upcoming year from carriers and more participation by states. So those are the 2 I'd focus on. We could talk about a lot, but those are top of mind for me. Right. That's the use of artificial intelligence and blockchain is certainly a very hot item. In fact, I think there's a panel going on as we speak addressing that topic. And certainly, if you focus on at the NAIC level, we just created a letter committee, H committee, which that addresses technology, and within that, the use of big data and artificial intelligence. And so it is obviously a top priority. We've adopted AI principles in the last few years, and we're taking those principles that have been adopted and deciding, well, how do we use those, right? Do we develop a model law, governance around that? And so I think, again, if you look at the upcoming year, we're going to really be focused on that. Big data itself, we have all this data that's very useful for the companies, it's useful for regulators, and we have the AI tools that can kind of harness that and use it in all these beneficial ways. Predictive rate models are something we talk a lot about, and those can be very helpful. But we also, as regulators, need to look at the risks of that, right? So you might hear a lot of talk about algorithmic bias, right? We want to make sure that whether intentionally or not, some of these proxy factors they use in the models don't result in discrimination. So again, that's been another key priority. But the main message I would say is we don't want to put restrictions in place that limit the use of those if they're done correctly, because we think they can be a big benefit. But obviously our role as regulators to make sure that consumers aren't harmed there. In terms of blockchain, that doesn't get a lot of attention. I know one of my staff is very focused on that. And I think in the area of statistical reporting, we're trying to look at specific uses where blockchain can help the industry and also regulators get that information more quickly and more efficiently. So I expect that to get a lot more attention in the coming years. So in terms of our what's going on in Virginia and the Bureau of Insurance, I'll focus on a couple of things. First of all, we've created a new division within the Bureau that, is really kind of getting to modernization efforts, right? And we want to take folks that, if your day-to-day is property and casualty or life and health, you don't necessarily have the time to focus on making the organization better and able to adapt to all the changes we're seeing, whether it's driven by technology, whatever it might be. So we created a new division focused on strategy initiatives, but also cybersecurity and data analysis. And so we're building up a team of experts in that area that can help support our other regulatory areas, get this information, this data in, collect it, analyze it, and give them the tools that they don't have today. So that's something that's very exciting. And speaking of that, we've created we had a 40-year-old regulation on the book that in our homeowners reg that we've decided needed to be updated. That was a very big undertaking. We've adopted the regulations, and now the carriers are filing these new forms, and it's been a very extensive effort to review those, but we're very happy with the progress we've made in that area.
Well, all I can say is there is a lot going on in the regulatory space these days. I'd like to thank the regulators who made the time to speak with us over the last few weeks or so. We know their time is valuable, and it means a lot to AAIS and our members.